Joining us now is Ron Ivey. He's a visiting researcher at the Harvard Human Flourishing Program. We were joking it's got a sinister name, but we promise he's a good guy. Ron, thanks so much for joining us. We really appreciate it.
Thank you all for having me.
Absolutely. So the reason we wanted to talk to you is I've been really fascinated in the last several months and even years about ESG. And so we've seen a bit of a turn against ESG when we're talking about oil and gas markets, the Dow Jones, the S&P 500. Let's put this up there on the screen, which is actually the SEC is now even investigating Goldman Sachs over ESG funds. But please just start at a most basic level. What is ESG? And then why should we care about it?
So ESG stands for environmental, social, and governance, and it's a way to frame a certain type of investment or a certain type of investment fund. And it started as a way to understand how investments or how corporate activities affect society, environment, et cetera. And it was an effort to really design products that would improve performance on environmental and social levels, and really answer demand that was out there for investments that were addressing some of these causes that were previously not addressed in previous investment structures. In the basic investment structure, you're thinking about profit, growth, these typical metrics. But there was an effort to try to understand what's the impact of a corporation on the society and the environment, and this was an effort to do that. It's grown in these recent years. It's grown up to now 1/3 of every investment or investment fund. It's projected to get to $53 trillion over the next 3 years. It's exploding, and part of that's because of the demand for investment, but it's also because there is an advantage for fund managers to pitch something like this because it adds to their revenues in terms of management fees, and it also allows them to market to new investors, to younger investors. So we're seeing a real explosion in the last few years.
Can you explain that piece? Why do ESG investments lead to these larger management fees?
Well, because there's more in-depth management in terms of the accounting of supposedly the accounting of impact, but that's been part of the problem. That there is a question about whether the metrics used or the measurement approaches used are actually actually dealing with impact. So the justification is, hey, we're not just dealing with typical investments. We have to look at additional criteria for our investment portfolio, which it would require additional investment. But the reality is what we're seeing is not necessarily always the case.
Mm.
So you caught my eye when you wrote this piece in American Affairs. Put this up there on the screen. Encourage everybody to go read it, which will have a link in there. Society Inc. Something that I have been really interested in here, Ron, is the role in which ESG is actually having counterintuitive impacts on our broader society. I think the peak example is Chevron increasing its ESG score or reliability by selling off a mine, and actually the mine becomes much more dirty and the environment gets much worse. The same amount of oil is produced and you actually have counterintuitive effects, but they get ranked as a green company in the index and get to continue to have some social cachet. So tell us about what you're seeing in your research about ESG, Ron.
Yeah, so we're basically three things are happening over the last 2 years. One is there's basically a revelation in the analysis of the funds themselves. A group of academics and journalists over the last year have been looking at what's actually happening in terms of performance and how performance is measured. Floynberg at MIT analyzed the criteria that are being used across these various credit agencies that are evaluating environmental and social performance. And what he found was that in some agencies, their evaluations are a company can basically perform at a very high level, and in another agency they're performing at a low level. So these distinctions or discrepancies between performance don't give you a lot of confidence that the criteria are actually helpful in evaluating investments. That's led to a retreat in terms of investors. We've seen a big drop over the last 6 months. In the first quarter, there was a 36% drop in investors that are in these ESG funds. And then third, it's leading to a reckoning with regulators. So you see both in the United States and Europe, regulators are starting to ask more questions about what these funds are actually doing, critiquing greenwashing and social washing. In the EU, we see the delivery and development of a new taxonomy of ESG fund nomenclature, basically to explain what the terms mean and give more credibility to those ESG terms. Second thing we've seen is actually crackdowns on companies like Deutsche Bank and their subsidiary DFW. You see the same thing on the other side on the United States. We have crackdowns happening on Goldman Sachs potentially and other entities. And then the SEC just releasing new regulations as it relates to naming funds, but also as it relates to the disclosure requirements on climate change emissions and other types of impact. So you see the shift basically where regulators were hands off and now they've moved into a much more hands-on, heavy-handed approach to the evaluations.
So tell me if I understand this correctly. So basically you have people who are sort of well-meaning. They want their money to be invested in things they can feel good about. Wall Street says, no problem. Pay us a little extra money. We can make that happen for you. Companies say, hey, tell me how I can sort of like navigate this system to trick people into thinking, total like classic greenwashing situation for the companies. And so it's really those those investors at the beginning who are kind of getting duped by the system, who think that they're putting their money into good things and having social impact, but really not. Is there a better way to run this system? So you're talking about regulators sort of cracking down. From what I read, effectively the only way that the SEC can go after companies is if they represented something to their investors that ended up being just completely false. Because it's not like there's some overarching sort of like ESG regulatory scheme where regulators can really come in and say, no, you're not meeting the legally set standards that would match up with, what investors would ultimately expect. So is there a way to do this that doesn't just result in bullshitting and greenwashing ultimately?
Yeah, I think you fundamentally have to go back and look at, how corporations are structured and how our political economy is structured and just be realistic. I mean, the way that we're set up, as you all well know, the last 40 years, we've moved into this shareholder maximization approach started by Friedman in the late 70s, early 80s, to where corporations their sole goal is to maximize shareholder returns. That's set in the culture of companies. That's set in the structures of organizations. That's set in the law actually. So it's very difficult for corporations to think outside of that box. And then the second thing, as you've all reported well, our economy is very concentrated because of the lax antitrust law and the growing concentration of corporations, coupled with that mindset of shareholder return maximization. If you try to do ESG metrics, then you have some, changing in naming and nomenclature. It's really fundamentally not going to change things. You're going to still have corporations have that fundamental motivation to maximize shareholder returns. And if there's a conflict with social impact or environmental impact, we know what they're going to choose. Mm-hmm. So how do you solve that? Well, one thing we could do is, from the United States government perspective, we could begin to measure and evaluate performance separate from the companies, create a separate entity that created some kind of corporate accountability organization that could use all of the various tools that are out there in terms of data and analytics and artificial intelligence to understand the corporate's performance and how they're impacting the core things that impact our life: air, water, the other things like social trust, et cetera. Yes. How do we know that they're performing well unless we measure from our perspective? It's never going to work if it comes from the corporate perspective, because they're just not designed to operate that way.
I think that's really well said. Let's end on that note. Everybody, go ahead and check out Ron's work. We're going to have a link there in the description. And we appreciate you joining us, man. Thank you.
Yeah, great to have you, Ron.
Thank you.
Absolutely.
Our pleasure.
Thank you guys so much for watching. Really appreciate it. As I alluded to earlier, for legal reasons and bureaucratic reasons, the announcement on our road tour and the tickets will come next week. I'm hammering as hard as I possibly can, so bear with us. We're sorry. But stay tuned. It will be coming along with another announcement specifically for all of our premium subscribers. So we're going to announce those two in pair. In the meantime, we got a ton of people coming in the studio in order to record some great content for all of you, partner content. So thank you for supporting us in that way. Premium subscribers, for those who want to support, link is down there in the description, and we'll see you all next week.
Love you guys. See you next week. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.